Welcome to Financial News in Review for Tuesday, June 11th, 2024, your go-to source for concise summaries of the top financial interview shows. We cut through the noise to bring you the key highlights, saving you valuable time each day. In this video, we will be providing important takeaways and insights for the following videos. From Adam Taggart, Thoughtful Money, we have the past 11 times this has happened, we've had a recession, Michael Kantrowitz. From KitcoNews, we have Get Off the Dollar, KitcoNews. From KitcoNews, we have What Snap Elections in France Means for Gold, David Morrison. From David Lynn, we have Russia to attack NATO next, Western troops in Ukraine by year-end, says Peter Zeihan. From David Lynn, we have Redfin CEO Housing to see major price cuts, soft summer ahead, Glenn Kelman. From the Julia LaRoche Show, we have We're Hiding a Lot, why commercial real estate could be the next financial crisis, Chris Whalen. Summary. In the latest interview on Adam Taggart's Thoughtful Money channel, Michael Kantrowitz, chief investment strategist at Piper Sandler, provides an in-depth analysis of potential recession risks and market outlooks. Kantrowitz, the creator of the HOPE framework, Housing, Orders, Profits, Employment, illustrates how this framework can help track economic cycles and predict future trends. The central thesis of the interview is that despite certain signs pointing towards a recession, several mitigating factors may buffer the U.S. economy, preventing a severe downturn. Kantrowitz articulates that while conventional indicators like housing, orders, profits, and employment show mixed signals, the interplay of other factors may result in a less severe impact than previous recessions. Key points. Discussed by Michael Kantrowitz. 1. Housing H. Kantrowitz notes that while home builders have shown resilience, broader housing data, such as mortgage applications and building permits, remain weak. He emphasizes that consumer affordability perceptions for housing are at historic lows due to high interest rates and home prices. 2. Orders. ISM and other PMI data have shown mixed results, with manufacturing struggling more than services. He highlights that in a sluggish economy, the cyclical part often holds the fate of corporate earnings. 3. Profits P. Profits show a bifurcated picture. Large cap stocks, especially those in tech or with significant AI exposure, are performing well, but small caps in other sectors struggle. This disparity indicates where investors should focus amid economic uncertainty. 4. Employment E. The unemployment rate's recent uptick to 4% aligns with historical indicators that suggest a recession might be underway. However, Kantrowitz argues that the term recession may not capture the nuanced effects on different economic segments. Key predictions by Michael Kantrowitz. 1. Mitigated downturn. Thanks to fiscal spending, low oil prices, and resilient consumer wealth bolstered by high asset prices, any forthcoming recession might be milder and more prolonged than commonly anticipated. 2. Continued market resilience. Kantrowitz remains bullish on equities in the short term, particularly in quality stocks with strong fundamentals, despite potential cyclical challenges. The interview concludes with Kantrowitz's insights about adaptation and resilience in strategy, urging investors to seek quality investments and not to panic despite mixed economic signals. He underscores that the market's reaction to unemployment and inflation trends will be crucial in determining the future economic landscape. Title of the video: The Past 11 Times This Has Happened, We've Had a Recession, Michael Kantrowitz. Key themes. 1. Current economic assessment: resilient but slow-moving economic conditions. 2. Impact of Federal Reserve policies. Aggressive rate hikes and quantitative tightening may lead to a recession. 3. HOPE framework analysis. Sequence of housing, orders, profits, and employment as indicators. 4. Market dynamics. A focus on quality stocks, particularly within the tech and large cap sectors, given present macroeconomic conditions. 5. Mitigating factors. Fiscal policy, consumer wealth, low energy prices, and a flexible labor market could prevent a severe downturn. 6. Outlook. A potential mild downturn with continued resilience in certain market segments. In this interview, KitcoNews hosts a guest who discusses the value of the US dollar and the potential future of Bitcoin, providing in-depth insights and analysis. The core thesis of the interview is the gradual decline of the US dollar's value. The guest argues that the dollar is decreasing in value due to continuous government printing and economic factors, supported by thoughtful commentary and evidence. Key points discussed by the guest include: 1. Weakening of the U.S. dollar. The guest elaborates on how the U.S. government's ongoing printing of money is devaluing the dollar. They use economic theories related to inflation and currency depreciation to illustrate their argument. This forms the basis for their call to get off the dollar. 2. Macroclimate favorable to Bitcoin. They also discuss the macroeconomic factors that are driving the demand for Bitcoin in the near term, suggesting that Bitcoin could rise to $125,000 to $135,000. Significant quotes about the increasing public knowledge and concern regarding the dollar's future strengthen their case. 3. Growing adoption of Bitcoin. Additionally, the guest covers the increasing number of Americans, 30 to 40 million, who already hold Bitcoin. They highlight the rising voices supporting Bitcoin and the availability of ETF vehicles, making it more accessible to the average investor, providing a well-rounded view of Bitcoin's growing demand. The guest also makes several key predictions, such as: 1. Bitcoin price surge. They predict that the demand for Bitcoin will continue to increase, which will drive its price up relative to the dollar. This implies a significant shift in how people might store and perceive value in the near future. 2. Decline in dollar demand. The guest forecasts that the demand for dollars will decrease correspondingly as more people turn to Bitcoin and other alternatives, further devaluing the currency. In conclusion, the guest summarizes their insights by reiterating the importance of considering alternatives to the dollar, encouraging viewers to look into Bitcoin as a viable option. They emphasize the importance of staying informed and proactive in response to the declining value of the dollar. The title of the video is Get Off the Dollar, KitcoNews. The YouTube channel is KitcoNews. In this interview, KitcoNews hosts David Morrison, a senior market analyst at Trade Nation, who discusses the implications of France's snap elections on gold prices. The conversation provides in-depth insights and analysis regarding the intersecting political and economic trends in Europe and the United States. The core thesis of the interview is that the recent political developments in France, alongside critical economic indicators from the U.S., will have significant impacts on global markets, including precious metals like gold. David Morrison argues that the unpredictability ensuing from Emmanuel Macron's call for snap elections in France will contribute to market volatility, supported by thoughtful commentary and evidence related to investor sentiment and market stability. Key points discussed by David Morrison include: 1. Political instability in France. Morrison elaborates on how Macron's decision to call for snap elections, following a swing towards right-wing parties in the EU parliamentary elections, has rattled the French stock market. He notes the unexpected nature of Macron's response and its immediate negative effects on major indices and banking stocks, referencing significant drops in the French CAC and banks such as BNP Paribas and Société Générale. 2. U.S. economic data and Federal Reserve decisions. Morrison discusses the robust U.S. non-farm payroll report showing 272,000 jobs added, significantly above the expected 180,000. This data recalibrates expectations regarding future Federal Reserve rate cuts. He highlights the importance of upcoming CPI numbers and FOMC meetings, analyzing how these will influence market behavior and inflation expectations. 3. Gold and silver market trends. Morrison covers the recent volatility in gold and silver prices, attributing movements to shifts in U.S. dollar strength and investor sentiment. He provides additional context by discussing China's central bank's gold purchasing behavior and its implications for market trends. Using technical analysis, he predicts higher gold prices in 2024, potentially reaching up to $2,800 to $3,000 per ounce, and shows optimism for silver, citing its underperformance relative to gold as a sign of potential growth. David Morrison also makes several key predictions, such as: 1. Gold price increase. Morrison anticipates a significant rise in gold prices, potentially reaching up to $2,800 to $3,000 per ounce in 2024, driven by continued strong demand and positive market signals. 2. Economic impact of U.S. CPI data. He predicts that if the upcoming CPI data indicates higher than expected inflation, it could lead to a rebound in gold prices as investors seek a hedge against inflation. The data is crucial for shaping expectations around Federal Reserve rate cuts and overall economic outlook. In conclusion, David Morrison summarizes his insights by urging investors to remain cautious but strategic amidst the volatile market conditions, emphasizing the importance of sticking to well-founded investment strategies and being vigilant about risk management. He encourages diversification across geographies and asset classes and suggests keeping an eye on emerging markets for potential opportunities. The emphasis is on understanding the broader geopolitical and economic contexts to make informed investment decisions, highlighting the crucial role that political developments and economic indicators play in shaping market trends. The title of the video is What Snap Elections in France Means for Gold, David Morrison. The YouTube channel is KitcoNews. Sure, here's the detailed summary of the interview hosted by David Lin featuring Peter Zeihan, with particular emphasis on the given structure. Summary. In this interview, the YouTube channel David Lin hosts geopolitical expert Peter Zeihan, who discusses the potential repercussions of the Ukraine conflict extending into broader NATO regions, including a possible Russian attack on NATO. Zeihan provides in-depth insights and analysis into the geopolitical landscape surrounding Ukraine and Russia, as well as broader implications for global security and economic stability. The core thesis of the interview is the escalating geopolitical tensions surrounding the Russia-Ukraine conflict and the subsequent reactions by NATO and Western countries. Peter Zeihan argues that Russia's ambitions will not stop at Ukraine, and that there is a real possibility of extended conflicts reaching into NATO territories like the Baltics, Poland, and Romania, supported by thoughtful commentary and evidence. Key points discussed by Peter Zeihan include: First key point. Zeihan elaborates on Russia's strategic need to secure a defensible perimeter, necessitating the occupation of vast territories in Ukraine and beyond into NATO countries. He uses historical context and current military strategies to illustrate how Russia's actions are driven by defensive needs rather than expansionist ambitions, given their demographic and geopolitical vulnerabilities. Second key point. Zeihan discusses the significant policy shifts within NATO, particularly the integration of Western troops, such as the French, into Ukraine. He highlights the strategic imperative for Europe, particularly France, to transition from an economic union to a security-focused entity, referencing specific quotes and historical parallels like the Crimean and American Civil Wars to strengthen his case. Third key point. Additionally, Zeihan covers the intrinsic demographic and economic challenges facing Russia and Europe. He explains how Russia's demographic decline is a critical factor underpinning its current military aggressions, and how Europe's aging population affects its future economic and political stability. He provides examples and context on the implications of shrinking workforces and changing economic models. Zeihan also makes several key predictions, such as Prediction 1. Zeihan predicts that by the end of the year, Western troops, including those from France, will be operating within Ukraine. The implications being a significant escalation in the conflict, positioning European forces directly in opposition to Russia. Prediction 2. Another prediction involves the gradual breakdown of globalization due to escalating global conflicts and the retreat of the U.S. from its role as global hegemon. This implies a future where international trade and economic collaboration are dramatically reduced, potentially leading to economic isolationism. In conclusion, Peter Zeihan summarizes his insights by emphasizing the precarious balance the world is in concerning the Ukraine conflict and broader global stability. He underscores the importance of cautious and measured responses to Russian provocations to avoid triggering nuclear escalations. Zeihan calls for a reevaluation of global security strategies, emphasizing the need for preparedness and strategic foresight by Western nations. He emphasizes the importance of understanding the multifaceted nature of geopolitical conflicts and the interconnected challenges of demographics, economics, and military strategies. The title of the video is Russia to Attack NATO Next? Western Troops in Ukraine by Year-End, says Peter Zeihan. The YouTube channel is David Lin. This summary accurately encapsulates the detailed discussion and key points from the interview, providing an exhaustive overview for those interested in the geopolitical dynamics surrounding the Russia-Ukraine conflict and its broader implications. In-depth analysis with Glenn Kelman on the 2024 housing market. In this interview, hosted by David Lin on his YouTube channel, Redfin CEO Glenn Kelman offers a comprehensive analysis of the U.S. housing market, predicting major price cuts and a soft summer ahead. Kelman provides thoughtful commentary on various economic factors and their potential impacts on real estate. Core thesis. The core thesis of the interview posits that the U.S. housing market is set for significant price adjustments, driven by a complex interplay of high interest rates, consumer behavior, and market forces. Kelman argues that despite the emotional attachment of homeowners to their properties, downward pressure on prices is inevitable. This thesis is supported by Kelman's data-driven insights and industry examples. Key points discussed. 1. Market stickiness and emotional attachment. Kelman elaborates on the reluctance of homeowners to lower their asking prices, describing how emotional commitment to their property makes prices stickier. Example. He cites the increasing conversations brokers are having with sellers about price adjustments. 2. Interest rate sensitivity. Discussing the rising interest rates and their impact, Kelman notes that consumers are becoming increasingly sensitive to rate fluctuations. Significant quote. Consumers are more attuned to economic indicators and mortgage rates now than ever before. 3. Inventory crunch and affordability crisis. Kelman covers the severe inventory shortage in the U.S. and its implications on affordability, noting a significant decline in housing supply and a mismatch between wages and home prices. Context. He mentions that major cities and even rural areas are seeing unprecedented price increases due to remote work trends. Before, investor activity decline. He discusses the recent decrease in investor activity, which had previously driven up the prices of entry-level homes. Evidence. Emerging data shows a pullback from institutional investors who were active in the market over the past few years. 5. Regulatory and structural changes. Kelman touches on recent legal and regulatory changes in the real estate industry, particularly a significant class action lawsuit that may lead to buyers paying their own agent fees. Example, he highlights the industry's evolving practices due to the new legal landscape. Predictions by Glenn Kelman. 1. Softening of home prices. Kelman predicts a continued softening of home prices, particularly in markets like Texas and Florida, where homes are already facing significant price cuts. Implications. This could lead to increased affordability for new buyers and reduced speculative activity. 2. Interest rate cuts and market reactions. He anticipates potential interest rate cuts by the Federal Reserve, which might slightly revive the housing market, though severe fluctuations are expected. Implications. Any rate cuts would likely be modest and already priced into current market expectations. 3. Impact of immigration on housing supply. Reflecting on Canada's immigration trends, Kelman suggests that similar population increases without adequate housing starts can lead to severe shortages and sustained high prices. Implications. The U.S. may need to adopt different strategies to balance supply and demand. Conclusion. In summary, Glenn Kelman provides a well-rounded and evidence-backed analysis of the housing market's future. He concludes by emphasizing the need for increased housing supply and regulatory adjustments to improve affordability. Kelman leaves viewers with a key takeaway. While the market faces numerous challenges, strategic policies and consumer vigilance can help stabilize the real estate landscape. For further insights and details, viewers are encouraged to follow Glenn Kelman on Twitter and Threads, where he continues to share his expert perspectives. In this interview, hosted on the Julia LaRoche Show, financial expert Chris Whalen delves into the precarious situation of the commercial real estate market, suggesting it could precipitate the next financial crisis. The core thesis of this interview is Whalen's argument that there is a significant, unrecognized accumulation of defaults within the commercial real estate sector due to ongoing political forbearance, and this could have dire financial consequences. Key points discussed by Chris Whalen include Hidden defaults in commercial real estate. Whalen articulates that policies akin to those seen during COVID moratoria are in place within commercial loans, resulting in an accumulation of unrecognized defaults. He emphasizes that loans are being modified without being declared as defaults, creating a false sense of security. 2. The impact of elevated interest rates. He discusses the unintended consequences of prolonged elevated interest rates on housing and commercial real estate markets. Housing prices, despite higher rates, have continued to rise, but a significant slowdown and potential downturn are expected in the coming years. 3. Comparative analysis with 2008 financial crisis. Whalen contrasts the current situation with the 2008 financial crisis that was driven by residential housing, noting that this time the threat is from commercial real estate. He stresses that commercial real estate defaults could create systemic risks due to the sheer size of the market. 4. Declining economic health indicators. Whalen highlights several indicators pointing to the underlying fragility of the economy, including declining asset quality in banks and large amounts of debt still hiding within the system. Key predictions by Whalen include: 1. Potential market crises triggered by commercial real estate. He predicts that significant failures in commercial real estate could trigger a financial crisis, with large-scale defaults having systemic impacts similar to the crisis of 2008. 2. Political changes leading to economic repercussions. Whalen speculates that a change in the White House, particularly a return to power by Donald Trump, might lead to a major cleaning house, which could involve addressing the accumulated hidden defaults and reforming fiscal policies inherited from the Biden administration. In conclusion, Whalen summarizes his insights with a caution about the hidden financial dangers lurking within the commercial real estate market and stresses the importance of transparency and proactive management in preventing a potential crisis. He encourages viewers to maintain vigilance about economic health indicators and to consider the broader implications of political changes on financial stability. The title of the video underscores the urgency of his message: "We're hiding a lot. Why commercial real estate could be the next financial crisis." Whalen. The interview sheds light on important economic issues, offering viewers a nuanced understanding of impending financial risks. Thanks for watching Financial News and Review for Tuesday, June 11th, 2024. If you'd like more time-saving content, please remember to like and subscribe. If you have ideas for more channels you'd like to see, drop a comment below. See you next time.